We're seeing some of that rand typical volatility coming through at the moment. We had it yesterday trading down to 662, this morning up at 673, back around 669 at this stage. But it looks like a bit of weakness filtering through for the rand.
Yes, good morning, Steve. And we've got a range for today of 668 to 678. And I think the bias is in favour of a weaker rand this morning. And that's really on the back of global factors. Predominantly, I think we've seen precious metal prices coming off a little bit, and we've seen equity markets coming off the boil as well. And I think that's just translated into a bit of risk being taken off the table by a number of players out there. But also we saw the PIC announce at the beginning of this week that they are looking to diversify some of their assets into the rest of the continent, and that might also have just aggravated some of yesterday's rand weakness.
Well, the PIC talking about 45 billion rands worth of assets being divested into Africa. Now, the PIC has, I think, R1 trillion rands worth of assets under management. So not a huge amount, but do you think the market's starting to anticipate some outflows there?
Well, yes. I think that the PIC has traditionally kept most of its assets onshore. And if this is the first of more steps to come, then it could definitely scare the rand bulls to some degree, because obviously that would translate into some kind of portfolio outflow. We've seen huge portfolio inflows into South Africa for the past couple of years, and in recent months those have dried up, and now since February they started to pick up again, foreigners coming in. So if our local asset managers start to diversify, especially in the wake of the further relaxation of those prudential limits, then it wouldn't be supportive of a stronger rand.
Meantime, we have some other risk factors. We had Japan's nuclear disaster also affecting sentiment. They were increasing the nuclear crisis to the same level as Chernobyl. We also have US earnings season. So do you think as earnings season kicks off in the US, we could see some jitters in these markets?
Definitely, Stephen. I think there's a lot of nervousness. At the end of the day, we've got to see the corporates actually coming back to life. We've obviously seen a lot of fiscal and monetary stimulus into the various economies since the credit crunch, and we need to actually see all of that translated into higher corporate profits and ultimately job creation, which will then in turn stimulate overall consumption within the respective economies. So if earnings figures impress, then you're likely to see risk appetite coming back in favour, because then it will allude to the global recovery being on track, and of course vice versa. If those earnings figures aren't up to analyst expectations, then we could see a little bit more risk aversion creeping back into the market.
Well, the International Monetary Fund and World Bank kicking off their spring meetings this week, and IMF report yesterday talking about global growth prospects. Looking at South African growth prospects, though, it seems to be a little bit conservative, expecting 3.5% growth in South Africa this year.
Yes, Stephen, that's a little bit more or softer than what we expect, and we've penciled in 3.7% for the current year, so a little bit softer there. But I think what was interesting to note as well is that the IMF does not believe that the central bank has the ability to hike rates in the short term, because this recovery still remains fairly fragile. And we share those sentiments. We think that the Reserve Bank will only probably hike rates in the first quarter of 2012. And thus we think that there's good value in the FRA curve at the moment, because the FRA curve is pricing in a full 50 basis point hike within a 6-month period, and we just think that's a little bit optimistic.
Well, in the meantime, we still have that oil price holding above the $120 a barrel level, even though it has come off the boil slightly. Inflation numbers coming out of the Eurozone, the UK today, and also from the US on Friday, and we're likely to see those higher commodity prices and energy prices reflected in those inflation data, aren't we?
Absolutely, and that's something else that the IMF also referred to in its report, that obviously these commodity prices now are starting to create some inflationary bugbears, and the key will be to look at whether or not these high commodity prices translate into second round inflationary pressures, higher wage demands, etc. So it's something that the policymakers will definitely be watching, and we saw in recent weeks how Fed officials started to become a little bit more hawkish than what they've been about inflation in more recent weeks. So of course if these central banks in general start having to tighten rates as a result of inflationary pressures, then it really could be the turning point for this emerging market bull run and this commodity bull run that we've seen, because both commodities and emerging markets have benefited from this glut of liquidity that's been pushed into the system by the developed markets. And of course, if they start reining in some of those accommodative stances and start hiking rates, then all of a sudden the cheap money will be a thing of the past, and we might have to see these investors re-looking at some of their risky, high-yielding and pro-cyclical investments.